Today is Tuesday, June 28th. It is Brexit +3, if you will. I want to take a look at volatility. This is the volatility index, the VIX, and I want to make or add to my case that I've been making the last couple of days that the panic was way overblown. And while I do think the stock market is weak and heading lower, and the bond market is certainly telling us a tale, don't quite think that this deserves the panic that the media is throwing at us. I think the global economy is not going to be collapsing here, just based on stock charts. So we have the October 2014 Ebola panic, little peak there. Here is August of last year, heading into the mini flash crash. Market was tanking ahead of that, as you can see. And then here it is, January and February of this year, when the markets bottomed and just reversed and took off. Looked like it was breaking down. Fear was up a little bit, and then off it went. Let's zoom in a little bit. You can see that the panic at Brexit was not even close to what it was in the beginning of the year. And the beginning of the year was rather normal, if you could use that word. Let's zoom in a little bit. Here's today, Tuesday. There's Monday. There's the day after the Brexit vote, or when we first found out about it. You can see it went way high there. But check out where it is now. You know, after only 2 days, only 1 day of rebound, really, in terms of stock prices. And look where it is, back down before the vote. Now, here's the easing as the stock market rallied heading into the vote. I guess the forces of Remain thought they were winning in the polls. And then afterwards, you can see what happened. But the point is that volatility has calmed down quite a bit, and it never even reached levels of previous peaks, previous major bottoms. Actually, that's a little confusing. It never reached the levels of previous fear. Fear got high enough to create the bottom. Here, it hasn't done that. All right, so according to the VIX volatility index, one sentiment read, it just wasn't as bad as everyone was saying. We looked at this before. I'm going to look at copper. It's the copper ETN. We can get rid of that. You know, I made the case, I think yesterday or the day before, that copper is already in a bear market. You know, no question about that. It was a bad sign for the global economy. But yesterday, the day after the initial reaction, copper traded in the green the whole day. It was up, and now it just jumped up today. So I think copper is telling us that economies are not collapsing. This bear market's already been, baked in. And, copper, could be heading towards this long trend line here, sideways. I don't know. The point I'm trying to make, again, is that copper didn't fall apart like you might expect if the global economy was going to really collapse. So there you have it. Just more reasons not to panic. I think the markets are weak, but I don't think this is the end of the world that some pundits are making it out to be.